So we're talking about Fibonacci retracement levels and Fibonacci retracement numbers. So if you can recall what I said about Fibonacci, if you can recall what I said about Fibonacci, can you hear me, please? If you can hear me, type yes on the chat box. Okay, since you can hear me, that's fine. I don't know why the network is acting this way, but we'll continue with, don't stop our today's spirit. So yeah, Fibonacci, we spoke about Fibonacci retracement levels and numbers. So if you can recall, I said about Fibonacci retracement numbers and levels. I said Fibonacci retracement levels were gotten from Fibonacci numbers, which is adding the two previous numbers to get the subsequent one. So that's how Fibonacci numbers were gotten. And Fibonacci's retracement levels were gotten from Fibonacci numbers. And I said Fibonacci retracement level is good in a trending market so that it can help us know how to pick our entries and help us understand when the market is going to retrace to. So like I said, if the market is retracing, like market moves in ICI, impulse, corrective, or in an uptrend, which is lower high to higher high, lower high to higher high, lower high to higher high, and in a downtrend, which is higher high to lower high, higher high to lower high, lower high rather to lower low, lower high to lower low, in a downtrend. So impulse corrective, impulse corrective. So, and like I said, if the market is moving in a certain direction, it must retrace to a level of the impulsive move, so a certain percentage of the impulsive move before going back in the original direction. It must always retrace to a certain level of the impulsive move before going back in its original direction. Is a law. The market can't just move straight. It must retrace to a certain level of the impulsive move before going back in its original direction. So, and it's a very good thing for entering and for entering the market in a trending market. Fibonacci has saved a lot of life. There are some forex traders that only use Fibonacci candlestick formations. That's all they use, and overbought, oversold, which I'm going to talk about later on. So Fibonacci is very good, please. It's a very, very important topic. And I'm sure you guys watched the last video about the first video on Fibonacci, and I'm sure you guys would have gotten the rudiment, the core concept of Fibonacci. So yes, so let's proceed to chart. Let's go to the chart since we already know all this. So now, like I said, let me go back. Let me show you guys something in case. Like I said, in an uptrend, like I said, in an uptrend, if you have to draw a Fibonacci, you take it from the swing low or from the lower high to the higher high. So you know where to retrace to. So like this now, from this impulsive move, I took it from the lower high to the higher high as in an uptrend, and it got to 50 retracement level and it went up. So the same principle applies in a downtrend move. You take it from the higher high, from the higher low to the lower high, and you spread it to the right so you can see your numbers well. Look at it. It will trace to the 38.2 and it continues in its original direction. So that is how it works. So let's go to the chart. So, and I remember I told you that it should not be used in isolation. Please, I told you it should not be used in isolation. It should be used with confluence of other factors, support and trend lines. Please always remember that it should be using together with other factors. So now look at this. This is a downtrend, right? This is Euro USD. This is a downtrend. So now the market is actually in a downtrend. We already know that because looking at it, this is the resistance And this was the previous support of the market. Looking at it, this was the previous support. So it broke this support, broke this particular support, broke it. When it broke it, it went to retest it a bit. Look at the retest here. It went to retest it and it continued in its downtrend. Same principle. So if you want to know where this market is going to retrace to, what do? You just pick out your Fibonacci to know when to enter this particular downtrend. So you start from the and build it to the from the higher eye to the lower eye in a downtrend. Look at it. And when it got to the 5150 level, look at it started going back down in a downtrend. Look at it. Like I told you, you will take it from the highest eye to the lower eye here. That is the first eye here. The fact is the first bullish candle, bearish candle in the downtrend, and the last bullish candle before the retracement. Can you see it? From this swing high to the swing low, as it's in a downtrend. And look at it. When it got to the 50 retracement level, what happened? There was a long wick. Like I always tell you, you always see a long wick, a long rejection. And it started what? It started selling. It started selling. Look at it. The candlestick formation was even was a shooting star, a long shooting star, and it started going down. So the right thing to do now is at this point, look at it here. Look at this support. When it got, look at it. Look at it. It confluenced with two confluence here. Look at the support. Look at the previous support. Also turned resistance here. Can you see? This is one more. This is on that confluence here. Look at this chart here. This was the resistance. This was the support. Previous support. Previous with the resistance and the support. What happened? The market broke it. Went to retest it and started coming down. So you now drew your Fibonacci here. Look, I started retracing here. You notice that okay, market has started retracing here. What happened? You take your Fibonacci from the swing high to the swing low to know where it will retrace to, so you can enter your sell. And look at it. Two confluences here. It got to the 50, and where is the 50? The 50 is exactly as the support here. Can you see? It came back to test this support. Look at it here. This is a sure sell. Anytime you see two confluences like this, please enter it. This is a very sure sell. Look at it. Look at it. Look at the previous resistance, the previous support. It later turned resistance here. When it broke it, it tested it, and the market came. It tested it. It traced back to it, and it started selling again. Can you see? Now this is how Fibonacci is used. This is how it's used in a downtrend. Can you see the beauty of Fibonacci here in a downtrend? So let's go to another example. Let me show you another example. Fibonacci. Please note, always never use Fibonacci in isolation. Never use it in isolation. Please do not use it in isolation. Look at this place here. Look at this place. This place is look at this upswing here. Look at this bullish upswing. This upswing here. It was going up for a while. Look at this. This is an uptrend. Look at this. So this was a support. Look at it. It was a support. It was a support before, because previously the market was in. Like I said, this was a previous support. Looking at the past, it was a support before. Anytime the market got here. Thank you. It's the network. Please bear with me. So anytime, look at it. Like there's a huge wind blowing here. So I think it's about to rain over here. So that's why everything is acting strange. So look at this place. This was a previous support. Look at it. That was later broken and was retested. Look at the retest here. Like I told you, it's always a zone. So we retested the zone twice, and it tested and it started coming down. And what happened when it got to this This support turned resistance, right? And it came to form a new support here. And what happened? There was an upswing here. Started buying here. So if you want to, like now, when it started buying, there was a little retracement here. When it got to this support turned resistance, what happened? It traced a bit. So if you want to know when to enter it, sometimes you can just wait to see, because sometimes it might reach this resistance and continue selling. But what happened? It came, broke it, and my God, it didn't even retest it because it was an impulsive, strong buy. Look at it. Look at this upswing here. Look at this upswing. Like I told you, in an uptrend, you take it from the ups, from the down to the up. That is from the downswing to the upswing. Look at it. From here to this place. Do you know where to retrace to? And look at when it got to this 38.2 area, what happened? It started going back in the uptrend. So that's how it is. It can really help you. But in this situation, you wait for a confirmation, for a break of this area, for a break of this support on resistance. Do you understand? To know if it's going to continue going in the uptrend. And look at it broke it and started going. That means you enter after the break in this particular situation, and trust me, you make your money. So Fibonacci is, like I said, it doesn't lie. Fibonacci never lie. It doesn't lie. Look at this, is a ranging market. So it's a ranging market, but still, it's an up. Look at it, was a downtrend. Market was in a downtrend here. Then what happened? It started going back up. When it got to this support, look at it, started going back up, and it formed a new resistance here. This zone here became the resistance zone. This zone. So look at, if you want to know uptrend, if it's going to retrace to you, you see, look at when it goes to 78.6, look at huge reversal. Look at the rejection here. What happened? It started going back up. It retraced to the 78.6% level of this impulsive move and started going back up. So this, if we were to, because this is actually a range, a consolidating market or a ranging market, because it's moving, it's not really an impulsive move, but you can always enter it too using your Fibonacci. Look at when it got here, 78.6, enter your buy here and you make your profit. So like I said, Fibonacci doesn't lie, but you're not to use it in isolation. Please use it together with other influence. Please use it with other confluence. We are confluence traders here. We just enter the market based on one reason. Enter the market based on multiple reasons. Multiple reasons, because from experience I've learned to. Because there's a time when I first started using Fibonacci, it was so sweet, because how can something be this accurate? You know, how can something be this accurate? I was impressed by the accuracy of Fibonacci. So I forgot to use it to other conference, and I learned the hard way. I learned the hard way. I learned the hard way. That's why I will never use it in isolation again. I use it in other conference, because you can try using Fibonacci alone and discover that and discover something else. So let me look for a good trending market. We've already done this one. This was the 78.6 for going back in the uptrend. Okay. Now look at this uptrend there. Look at this. This is a zone. So when the market got here, we respected this zone and started going back up. It broke this minor resistance here. So at this point, it's not that okay, something is happening. The market is going up. So let's look at it. Fibonacci will always tell you where to retrace to. Look at it. Will always obey it. It will obey that. Obey. Look at it. I told you it's a zone. When it got to this 50 area, in between 50 and 60, 1.8. That is the golden ratio, and the 50 and 0.5, the 50 fib level. What happened? The retracement stopped and it started going back up in the uptrend. Look at Fibonacci doesn't lie. Fibonacci doesn't lie. It doesn't lie. So if you have to enter this uptrend, this is it. Look at, because this look at it here. This is a minor resistance here. Minor resistance is over here. This is a minor resistance. Because this is where the market got to here. So the market was going up. It broke it here. And we tested this 50 again. Look at when it got to this area, this zone of resistance, it broke it, came back, retraced the bit, got to the 50. Look at the first retracement here. It got to the 50, went back up, retraced again to the 61.8 on that entry again, entered, then broke it finally. It started going up. So that is it with Fibonacci. It doesn't lie. Fibonacci doesn't lie. Please use it. It's so many conference. So let's go to USD CAD, USD card. So you guys should please watch this video over and over again, because the more you watch it, the better understanding. So for the past since Corona, USD has been selling aggressively, like USD CAD has been selling, but today there was strong news. Oh, it didn't even affect it much. It's still selling. It just broke the trend line a bit. It's an uptrust, then it came back to respect the trend line. Wow. So now look at this. It was going in an uptrend before. When it got to this zone, it broke it a bit. Then you think it will retest and continue going down, but it broke it. It broke it, went back up to retest the dynamic resistance. So and after when it got there, it started coming, formed an evening star. Then you know, okay, it's coming down. It's coming down. It formed lower high, lower low, lower high, lower low. So and it's formed double bottom here. Look at it. This place here is a conference. Is a conference here. Market. This place is a support. This zone, like I told you, is more than a line. It's a zone. Expected this zone, went back here, came back here, went back up, came back to this zone, went back up. Yes, Mr. Toyin said, I'm here to understand the application, maybe because my network is not stable. What is the best time frame to use Fibonacci? Okay. Now, Mr. Toyin, thank God that the class is being recorded, so you can go back and watch it again. You can watch it again and again. So Fibonacci works at any time frame. Like I said, if you are using 1 minute time frame, the same principle works in 1 minute time frame. Trend line principle, support and resistance, all the principle that works on a higher time frame works on the lower time frame. It works on any time frame. You understand? It works on any time frame. So I'm just using 1 hour time frame. Let me go to 15 minutes time frame. Let me show you something. So yeah, if you are trading USD CAD, you also know that the general trend is a downtrend, because this trend line is a downtrend. So if you are seeing a little bit uptrust from the trend line, just wait a bit to come back to respect it. The general trend has been a downtrend for a while. For how long now? Close to a year now. So let me show you, Mr. Tony. It works on any time frame. Yeah. Let me go to 15 minutes time frame. This 15 minutes time frame. Now, site network, oh God. And we still have a lot of topics to cover, a whole lot. Good God Almighty. We have a whole lot of topics to cover today. So I want to really go round this up so we can move to, because the next topic I'll be talking about is the EMA, the 200 EMA, the 200 moving average. So now this is the 15 minutes time frame, Mr. Tosin. This is the 15 minutes time frame. Look at it. The market is coming down, it's in a downtrend, a series of higher high, It's about to rain here, so I have to brush it so that the network will break. Please, you guys will bear with me. Please watch the video again. Now look at it. Market is creating a series of lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So now look at this. This is a 15 minutes time frame. Let me show you it's going to respect it. Look at it. This swing, this upswing to this downswing, this little retracement here. Look at it. When it got to the 61.8, look at market started selling again. It retraced to the 61.8 and started selling again. Started selling again. And if you go back in time to check out, you find that this place is a zone. This particular place that I respected is a zone. So always let it confluence. Look at, go back when you notice a retracement, go back in past to check it out. If should I enter at this point, go and check the past and check out if it was if it's a zone, a minor or a major zone. Look at, it was a minor support. It was a support on resistance. Look at, it was a support here. Anytime the market got here, it will buy, got here to buy. Then it broke it, it tested it several times. Then it got back here. Then it broke it, went to retest it. It went to retest it, it formed an evening star candlestick formation. Look at the evening star candlestick formation. Then it started going back to retest the trend line. Look at it, went back because it's forming a series of lower highs and lower lows. Then it went back, broke it. When it got to the trend line, it started coming back down again. Look at it, broke it, tested the zone. Then came back again to form, to retrace. Look at, when it got to this zone, it respected this support on resistance here. And what happened? Sold. So that is it for Fibonacci. So let me use for on that example. So here, look at this now. This is an uptrend. Now this is a good uptrend. Look at this place, double bottom here. So sometimes, let me show you something. Yeah, let me mention this. Sometimes the market can retrace 100%. It can form an 100% retracement. Sometimes the market can make an 100% retracement. Meaning it will go back to retrace your 100% of the impulsive move to form a double bottom, and it will go there to spring back up to form and to push higher, push the price higher. So you can retrace it back to 100%, and it will respect the zone. You can go back and form 100% retracement level and respect the zone. So look at this, a series of higher high, higher low, higher high, higher low. Okay, let me take this. Look at this. See? Look at it from this swing. Look at it. Oh, please don't forget to. You guys should observe how I'm drawing Fibonacci. Please, from this upswing, from this down, from this lower high, or from this higher low. This is an uptrend rather. This is the higher low to the higher high. I drew Fibonacci from this higher low to the higher high, connecting the wick. That is the first bullish move, or the first bullish impulsive move to the last bullish impulsive move here before the retracement. That's why I drew this fib form in an uptrend. That is from this higher high to this higher, from this higher low to this higher high. And I used the wick. And look at it. When it got to the 38.2 zone, what happened? It went back. It started buying up. Started buying. It went back up. And look at, if you check that zone again, that zone is also a resistance. Look at it, the resistance turns support. Then it went back here, came back to test the zone again, and it started going back up again. So if I'm to enter the market here, the moment I saw this retracement, I'll enter it here. I'll enter my buy here. So to go up, to go up, to go up. Definitely, to come back and put me in a bit in a loss. That is, it will break even to be even here. Then it's keep going back up, and that's how you make your profit. So yeah, that is it for Fibonacci. So if you guys have any question, please specify if you have any question. So Anybody that is trading USD CAD, please look for more sell opportunities than buy opportunities. Please, if you are trading USD CAD, look for more sell opportunity, because let me show you guys the daily time frame. You guys should see it. Look at it. Since beginning of March, since March 2020, look at it. It has been in a serious downtrend. When the corona was affecting US economy, in comparison with Canadian dollar, the US fell, and it has been falling ever since. Look at the trend line, a serious downtrend. So if you are to enter USD CSD, look for more sell opportunities. That means wait for the market to hit this trend line, then enter your sell. Do you understand? Or if you want to get the temporary buy opportunity, when it hits the dynamic support, you enter a buy. But it is better to enter the dynamic resistance because the general trend is down. So someone said something. Yes, Mr. Tony said it's 0.618. Wow. Please put on your mic, Mr. Tony. Please put on your mic. So I don't understand. This is 0.618, please. Mr. Tony, put on your mic, please. Mr. Tony, what do you mean by 0.618? Please put on your mic. Previously, like
You've removed the view.
Okay, what do you say?
Maybe you should type it.
Okay, let me type it. Mr. Tony, please type it. Wow, I think he's having bad network. He's already out. Okay. I think what Mr. Tony is saying, he was asking about the 61, the 0.618. That is 0.618. There are fib levels. Look at, we have 0.236, 0.382, 0.58. So now it is written in decimal. Yes, it is written in decimal form, but it's actually in level, it's actually in percentage. So like I said, some trading platform write them in decimal form, and some trading platform write them in percentage. So me, I like them in decimal form because it's kind of meter. So this is 0.61, 0.618 is actually 61.8. And like I said in the previous class, 61.8 is the golden ratio. Thank you, Mr. Conley, for spotting that out. 61.8 is the golden ratio. So please, Mr. Tony, please watch the last video again and watch this video. So to help you out. So let me go through on that here. And let me do the final explanation on Fibonacci. Like I always say, please don't use it alone. Let it confluence with other. Let it confluence with other setups like trend line and your horizontal lines. Please let it confluence with other setups. So the more reasons you have to enter a trade, the more profitable it will be. More profitable it will be. Now you guys should bear with me in today's class. The network is really acting up. So except we'll make a compromise, but I don't want to take this topic again because we still have a whole lot to cover. We have a whole lot to cover. So I don't really know what is going on with my network. Yeah, space network is really acting up. Yes, Mr. Kunle, that would be nice. That would be nice. Yes, I'd like us to take a class again tomorrow evening because my network is really, really acting up here. Really, really acting up. So tomorrow evening will be nice. Yes, please let's see tomorrow evening. So are we in the class now? We're in the class now. Tomorrow evening we'll continue. Like we'll take it again. Take the second stage of Fibonacci. Or Mr. Kunle, I also have a suggestion. When the network is good, when the network is good, okay, let's do it tomorrow night. Let's do it tomorrow night. I'll end it. I'll end it now. Tomorrow night, please. Tomorrow evening. Let's meet again. So I'll take it again tomorrow evening. Or do you know what I'm suggesting? I'm thinking when the network is good, can we join back by 9:30 or if that is okay with you guys? 9:30. Yes, please let's join back by 9:30. Thank you. Sure. Let me end this now.